Unlike Amazon with its diverse revenue streams, other consumer-facing companies report disappointing results. McDonald's saw its U.S. same-store sales fall for the second straight quarter. Same-store sales shrank 3.6% in the first 3 months of the year, their biggest drop since 2020. Brands as diverse as Harley-Davidson and cosmetics maker Estée Lauder are refraining from making forecasts or projecting lower sales this year. U.S. consumer spending grew at only 1.8% in the first quarter, less than half of what it grew in the three months before. For a deeper dive into the North American retail sector, we're joined by Doug Stevens. He's founder and CEO of consultancy Retail Profit. Great having you first. And second, Amazon reported better than expected earnings and revenue for the first quarter. How much of that was its e-commerce business, and how might its retail arm, especially third-party sellers, be affected by tariffs the current quarter?
Well, thank you for having me. A significant portion of that was indeed its e-commerce business, which has been taking a larger and larger share of Amazon's total revenue every year. In terms of how these tariffs will impact the company and its third-party sellers, I mean, it's hard to even calculate the damage here that can be done. It's tremendously significant. Just to give you a sense of the proportions, about 50% of the of China-based sellers represent about 50% of the top 10,000 sellers on Amazon's site. So you're dealing with a significant proportion of companies that are reliant on Chinese imports for their core businesses, and this is going to be tremendously difficult to navigate for them.
Doug, I'd like to understand one thing, because 50% of Chinese are gonna be very, very affected by these tariffs. But are Trump's tariffs affecting other retailers, for example, giving them an advantage over those Chinese or foreign retailers? How do you expect the trend and the whole site to move?
Well, I mean, the fact of the matter is it's difficult, frankly, to shop almost anywhere in the United States, and I would even include North America in that, because the Canadian market is very similar in terms of its level of Asian imported goods, particularly Chinese goods. So whether you're shopping on Amazon, whether you're shopping in a Walmart store or in a Target store, the fact of the matter is the proportion of Chinese products is significantly high. So this is something that is going to be widespread. It's certainly not exclusive to Amazon, although you could argue because of the proportions within its third-party marketplace, Amazon may be particularly affected by this.
I see. Just to get a hang on this, have we seen any direct price increases yet?
Oh, well, certainly, yes, we have. There have been price increases in anticipation of these tariffs coming through. Certainly, retailers have been trying to forestall orders as long as they can, because, again, we have to appreciate that this has been a very liquid situation. This has been off again, on again, and the tariff rates themselves have been all over the place. So there's a general sense of uncertainty. Some retailers are indeed getting out of the gate early, and in anticipation of higher prices, they're already moving retails. And in fact, I heard you mention in the introduction that Amazon was considering marking the actual tariff rate on prices. Well, in the Canadian market, we're already seeing grocery stores beginning to do that. They're actually marking tariff pricing on the shelf. So this is something that is of great concern to retailers across all categories.
And what long-term strategies can U.S. retailers implement to mitigate the ongoing effect of tariffs?
Well, it's very difficult, because a lot of the products that we're talking about, as much as the Trump administration might say that, the idea is to bring manufacturing back to the United States, there are two problems with that, three problems with that, really. Chinese manufacturing of the kind of goods that we're talking about is excellent. The quality is excellent. And frankly, the cost is just something that cannot be matched in the United States. So the kind of manufacturing that the Chinese market is doing for the United States is probably manufacturing that, for the most part, is never going to come back to the United States. And even if it did, even if there were companies that wanted to establish manufacturing of that kind, we're talking about, potentially years to establish that kind of supply chain within the U.S. So in the short term, it's very difficult. There may be some substitution that can take place on certain products, but it's going to be very difficult until this trade dispute is resolved once and for all.
And Doug, I want to look into AI. Do you think automation, AI could make supply more efficient, could help offset higher supply chain costs here?
Yeah, indeed. And certainly every major retailer in the United States is working at exactly that. That is really where we're seeing tremendous amounts of AI implementation. Rather than on the front end of the customer experience, it's really on the supply chain, where we already know there's tremendous inefficiencies in everything from demand planning right through to the logistics that get the product to the consumer's home. So AI is going to play a pivotal role in terms of giving retailers an ability to predict what inventory needs to be ordered, where that inventory needs to be deployed, and where it needs to be as close to consumers who are likely to order that, all in a predictive way. So yeah, potentially saving billions of dollars if you're a company like Walmart.
Doug Stevens, thank you so much. Great having you.
It was my pleasure.